part of you just wants to keep on proving you can just keep on making more, right?
Yep.
And then the other side was, well, now I have kids. I think artificial intelligence is going to change everything, 180 degrees. All these things have happened that have changed how we do business, changed how we lived our lives, changed everything, right? The internet. But what we're going to see with artificial intelligence dwarfs all of that.
Hi, I'm Raoul Powell, CEO and co-founder of Real Vision. I'm really excited to bring you this next interview. It's rare to get one legend on the screen, but one legend interviewing another is something extraordinary. It's really only on Real Vision you find something like this. Here we've got hedge fund manager Kyle Bass picking the brains of his good friend Mark Cuban. So what Kyle gets out of Mark is extraordinary, not something you see elsewhere in the media. Kyle digs into Mark's investment process. He finds out what his biggest stock holding is and why he holds it. He talks at length about artificial intelligence and the future of robotics and how he sees the world evolving. He also talks a lot about Bitcoin and ICOs. There's so much in this that they even cover the ground of how to pass on legacy inheritance to the kids and what a kid should get versus what they shouldn't get. You know, it's incredible to hear these guys talk, and I think there's a lot you can come away with. There's some actionable ideas and some amazing thoughts. And this is what we do at Real Vision. We try and find the smartest people in the world, the best investors, people you don't really get to spend time with, or you'd normally need to invest millions and millions of dollars in to speak to them. Real Vision gives you the opportunity to learn from the mistakes and learn from the thinking of the masters of the industry. You too can invest and think like Mark Cuban or Kyle Bass.
First of all, Mark, thanks for coming. You know, this is something that is just going to be a conversation, and I've got so many questions for you, and I'm sure
and vice versa.
You might have a few, but you know, as we sit here in Dallas, it's fun to not be in Europe and not be in San Francisco and not be in these other places where so many people feel like all of the innovation is. And you've done some amazing, innovative things here in this city, and you're well respected and admired here, and including by me.
By some, I would say all, but,
by some. But yeah, I wanted to ask you a few questions, and Raul from Real Vision here really wanted to. It's funny, when Raul and I talked, he said, you know, I want to know this, and this. And I said, perfect, because that's what I want to know too.
Fire away. I'm ready.
So I want to let's start with, first of all, what you do for Shark Tank. You know, we talked offline a little bit about, let's say, some of the people that follow you, I know think that you do Shark Tank to make money and potentially, you know, partner with people. And really it's a labor of love. And more importantly, what I know is it's something that you do to foster creativity and innovation and the American dream, essentially.
No question.
So
I mean,
tell us about that.
The whole reason I do the show, and now we're going into our 9th season, Sunday nights on ABC, it's purely because it sends the message that the American dream is alive and well. Mm-hmm. You know, we'll have people from all walks of life, from all parts of the country, come in with sometimes good, really, you know, impressive ideas, and sometimes just very basic, simple ideas. But the bigger message it sends to kids, to families, is that if this person from the middle of Iowa or from Athens, Texas can walk in and have an idea and a business they've started from scratch, so can you. And if they can walk in and formulate a presentation and get an investment from us, you can go out and get an investment and be successful as well, with or without the investment. And you know, the show has gotten to the point now where it's the #1 show on television watched by families together. I literally will walk down the street. I had this happen 2 weeks ago. This lady said, Mark. I mean, I didn't know her, obviously. And she's like, I just got to tell you, my son sells slime because of you. I'm like, you sell slime? And I have an 8-year-old son, so I know exactly what she's talking about, right?
Right.
And so he makes a slime in the kitchen, right? And goes to his 5th or 6th grade class, whatever it is, and sells it. And she's like, we watch Shark Tank, we get all the ideas. He understands cost of goods sold and making something and selling something at a profit. And it's all because of Shark Tank. I had another lady yesterday, I was doing a presentation somewhere, and she was like, "You're my MBA. I don't feel like we've got to go. I just watch you guys because there's always insights that I get." And she works with small businesses that I wouldn't otherwise get. That's why I do the show.
That's awesome. And it's when we think about our educational institutions, one thing that when I was growing up, no one ever taught me how to balance a checkbook. No one ever taught me how to think about business in high school.
Ever.
And
I
truthfully,
literally
in college, they don't.
I remember I was a junior in high school, Mount Lebanon High School in Pittsburgh, and I wasn't allowed to take the one economics class, because I had to be a senior. So I literally started taking classes at night at the University of Pittsburgh and decided not to go back for my senior year because they wouldn't let me take a finance or business class in high school. And and that ended up getting me to Indiana University. But yeah, I agree. We do, even to this day, we do such a poor job of educating kids not only about how to manage their own finances, but how to see the world and understand the impact of business, or understand their place within a business when they get a job.
Yeah, and so I see the fire and the drive in you that you probably see in the entrepreneurs you invest with.
Without question.
And you probably don't invest with people that don't have that fire.
Sometimes you miss it, right? They come in and they're rehearsed, and the good news is we get to do due diligence after the fact, after we agree to do something, and so we can pick up some of them, some of our mistakes, and cut them. But yeah, there's the old saying: sometimes you invest in the horse, and sometimes you invest in the jockey, and I try to get them both. But you're right. If you don't have that fire, if you don't have that thirst to learn, and that desire to compete, then you're not going to be successful. And you see it a lot on Shark Tank because it's an arduous process just to get on the show. There's more than 50,000 people a season that apply. Every year they have open auditions around the country, and then they whittled it down to the 230 we see while we're filming. And of those, even 20-25% don't make it on air.
Do some of the silliest Shark Tank pitches get allowed in just to kind of complete the spectrum?
Yeah, because it's TV, right? So I invested in a guy. So when I first did the show, I came on as a guest 7 years ago, and there was a guy that did a little dance. I want to draw a cat for you, right? And I gave him $25,000 for a third of his company, and all we did was draw stick figures of cats, and he charged $10 a pop, and people were buying them, and so literally I got probably a 50% return on my $25,000 investment. And I also, on top of that, I got hired to do 10 cats at $1,000 a piece by somebody, because the silliness of it is what sold.
Right.
But I made the investment not because I wanted to draw cats, right?
Right.
But because he was really good at SEO. And so sometimes you see somebody who doesn't really know how to manifest their skill set.
Right.
So you start with them here, and we did some things there, and then we took his creativity and pushed him into other areas, and now he's on to bigger and better things, which is great by me.
That's amazing. So yeah, that's a great story, because it takes an artist that has no idea how to run a business and then
then you realize he realizes he's got
together.
the skill set, right?
Yeah. And
sometimes it goes the other way. I had one deal. Again, at the beginning, I didn't know how long the show would last, so I was doing deals like, who cares, right?
Right.
But there was this one lady, and she made chocolate-covered pretzels, and they were good, right? And they sold here in Neiman's and other places. I thought, well, I can help her. Neiman's is in Dallas, headquartered here, and we go, and I said, you know what? When this airs, we have to have X amount of inventory, and let's go over your pricing. We're like, cost us $14 to make, we sell for $29. That's a great margin for us. And then we'll charge shipping on top of that, because they had to be cool to be shipped. Right. And so I try to stay active, and involved. And so I started getting cash flow reports almost immediately, and cash was going straight down. I'm like, what happened? She goes, I decided to give free shipping. I'm like, how much is your shipping? $15?
Not a great business lady. That's awesome.
Needless to say, well, she's still in business, but she's out of business. She just doesn't know it, right?
All right, so let's move into the investing side of things. You were the founder and creator of broadcast.com. You sold it to Yahoo. And you've always been a tech innovator, and you are to this day, I know from the conversations I have with you. The question I have for you is, as you think about your family, the Cuban family, and the legacy and the assets that you've built, how do you allocate those assets. I know you own the Mavericks. It's a giant chunk.
Yep.
It's worth a lot of money. But how do you think about allocating assets to different asset classes, or do you think
I
from the
don't
top
really.
down?
I don't think from the top down anymore.
Okay.
Right. So in my mind, I had a number I wanted to get to.
Yes.
I had a certain amount of liquidity that I felt like I needed.
Okay.
That would cover generations. Right. And once I got past that level, you go through that push-pull where you say, because part of you just wants to keep on proving you can just keep on making more, right?
Yep.
And then the other side was, well, now I have kids.
Yes.
And what's my greater return? My time with them. What's my greater return doing philanthropic things? What's my greater return? Shark Tank's not the best return from a financial perspective on my time.
Yep.
And so I got to the point where it's like, okay, I'll dabble in different things because it's fun and interesting to me, and I'm good enough that I know I'll get a return. But I'm not worried. Like as a family office, I've got X billions of dollars in assets. I need to make 7, 9, 15%.
Right.
I'm disappointed.
Got it.
I'm not at that point. So now it's more, what do I think is interesting? What's my optionality?
Yep.
Right. What can I learn from? Because I'm into tech, and what do I think can be impactful?
Interesting. It's an interesting thought. I'm going to go one place that you might not want to go because I'm not sure.
I'll go anywhere. That's okay.
So when you think about handing some of your generational wealth to your kids, or I guess handing's not the right.
Right. It's good. I'm not going to live forever. Let's put it that way.
Moving some of the wealth to your children.
Right.
How do you think about what's enough? Is it your entire estate? Is there a number that you think? I know Warren Buffett's number I think is 10 million.
Yeah,
to
mine
each
was.
child.
So when I wrote my will initially, it was 5.
Okay.
And not until they were 30.
Okay.
Right. So that I wanted them to go through life. And I know my wife, if she outlives me, which probably will, she'll fill in the blanks like she does today.
Right.
Right. Like my kids want money today. It's like, how are you going to earn it? I'm not that dad that says, here's a present, right? Here's a bank account. Here's a debit card. Just use it, and or whatever. No, here's your Amazon account. Not at all. It's like you want something, you have to earn it. I don't. It might be doing math.
Yeah.
Like with my 8-year-old, it's math for money. You have to answer math questions to earn $1 or $5. With my middle daughter, it's reading a non-school book. So I'll give her a history book or a biography, and she'll make $20. If it's over 300 pages, she can make more.
Right.
And then my oldest daughter's a challenge. My 14-year-old, that's a whole different beast. All those things worked up until this year. So we're working through trying to figure out what kind of jobs she can do.
Right.
So the point being that I want them to recognize, like I did growing up, that there's you have to earn what you're going to get, and that it's just not going to be waiting for you. And so whether that amount is 5 million like I have now, or 10 million when they get to 30, then who knows? We can adjust.
Right.
But I think now is really where it matters, and the habits that I get them into now are important.
Yeah, it's something I struggle with myself about. I probably like you. I haven't talked to you about your kind of adolescent life, but I had a job every day since I was 13.
Oh yeah, absolutely.
I didn't go on summer vacations. I worked. I worked every day for $3.05 an hour.
My first job was $1.60 an hour.
Mine was $3.05.
Yep, and I remember when the minimum wage went up to $3.05. It went $2.40, then $3.05.
Exactly right.
Yep.
And I struggle with my children because I want to be with them. I don't want them to have a job.
Right.
I want to go view the world with them.
Yep.
And
that's it's hard, right? Because on one hand you want them exposed to all these different things and to take advantage of your success, my success, but on the same time you want them to have the same foundation that we had.
Exactly.
Right. And so my decision has always been, you've got to work. Right. You're not gonna, you may come on the private plane, right?
Yeah.
And we may go all these places,
right.
And it may be a dream come true for, probably not for them because they're kind of used to it, right?
Right.
It's like walking on a commercial airline for the first time. Where's our pilot? Who are these people?
It's hard. That balance is really difficult.
It really is. It really is.
It's fun to hear how you interact.
It's a challenge. Yeah, it's a challenge, and you get a sense over time whether your kids are grounded or not, or whether they, and I tell them, I don't want you to be, my biggest fear after your health is I don't want you to be an entitled jerk.
That's right.
Right. If I think you have a sense of entitlement, because my oldest daughter slips into that from time to time. She called me up one time. We were on vacation, and she was with some of her friends. Dad, what? We're in a restaurant. Okay. I forgot to bring money.
I've done that before too. I call my friends.
But it's okay. We can put it on our friends, right? So I've got some work to do, but it is a challenge.
All right. Thank you. Let's get into. I know you and I have had an online back and forth about what's going on. I guess let's start with central banks, then let's get into ICOs and digital currencies, because I think that'll be what a lot of people are really interested in, and
that's what's hot right now. Right?
I'm really interested in it too.
Yeah.
So how do you feel? How do you think about what central banks are doing and what they've done over the last few years, and how our world kind of sits today financially? How do you, as Mark Cuban, look at this, and then how do you think about? Then we'll get into how you think about the digital assets.
Context is everything, right? So when you're going through a great recession, all you have is theory and history, and I think our Federal Reserve and globally, really, they followed the block and tackling rules, right? They reduced interest rates and did QE, increased liquidity, and for the most part, it works, right? And now we've reached a point now where there's become a division, because the increase in value of assets has been focused on so few assets, if you will, that most people don't own. Maybe some people have benefited from their house growing up in value until 2008, and then a lot of it's come back if you were able to retain it. But the wealth divide has gotten bigger and bigger and bigger, and I think we're kind of in a catch-22 now, where you don't know what's going to happen next with the economy. We're trying to normalize rates globally. The global economy is growing faster now than it has in a long time. You've got China, who overspent, and I know you've been had a lot of concern about what's going on over there. And so it remains to be seen what happens there. And they're such a big part of our economy. So you've got all these competing interests while an economy is growing. And so I'm not an economist, but you would think you're starting to see normalization here and interest rates trickle up, which is fine because they're still under historic norms, right? And what Draghi's doing, I think he's right, because you want that pop to continue over there. You don't want to see a global economy start to go into recession, particularly what's going on in Spain and things that are happening in Italy. And then everybody's got to hedge against China, right? Because if they start to tank even a little bit, and who knows what their actual growth rates are, right? But if they tank even a little bit, and you don't have a hedge, and you don't have some leverage still available, we're all in trouble, right? Because they can drag us all down. So I'm not opposed to things that are happening. I know there's some people that just want things normalized right now, just get rates up right now. I'm like, if it's not, fix it a little bit at a time.
Yeah.
So that's where I stand on it.
Yeah, the incrementalism of all the Federal Reserve banks is warranted.
Yeah.
Whether rates should have ever gone negative is left to your imagination. But
and look, the money went where the money should go at that point in time.
Yeah.
It's not like we became more global, and because of that.
Yeah.
And there's a lot of good things to be said from that.
Yeah. So when we think about, global cash balances today are the largest they've ever been. So when I think about what happened is the first QE that happened in the U.S. and Europe and Bank of Japan, Bank of England, had to fill a hole, right? There was a hole given the global financial crisis. Global financial institutions were insolvent. They had to print that money. They had to inject it.
No question.
In the banks. And that's something that you and I would have done if we were running these institutions. Whether or not we agree with expanding Fed balance sheets, we'd have to do it. So the second part was the part that felt good. The part where we started to see some growth,
right,
and started to see cash getting distributed. And the interesting thing is Fed policy was unintentionally distributive to the wealthy, because the wealthy are the only people that could use leverage and assets, and they don't spend it right away.
And because of this drop in the stock market, people who could afford to lease got out of the market.
Right.
And because they lost their homes, so many people lost their homes, whatever savings you had, you used to try to save your house and to try to, reimagine your life, if you will, and recreate your right. And so you got a greater disparity in standards of living, and that's where we are today.
And now we're at this point where, so this is my view, is we're at this point where the feel-good part of the printing is now maybe moving into the third phase. And that third phase is, when I look at global cash balances, they're about 110% of global GDP. They've never been that high in the history of the world.
110%?
Yeah, so they're almost $90 trillion of cash. okay? And then if you include sovereign debt below 1% yield, which I consider, call it a cash substitute,
right.
it's another 60% of global GDP.
It's crazy.
So historically, so today that number is 160, 170% together. Historically, that number's been 40%.
And how much of that is in commercial entities versus sovereign?
Oh,
Not just debt, but sovereign cash versus commercial entities.
So, like, if you're talking about sovereign wealth,
Yeah.
that's where the majority of it is, right? There's call it $6 trillion, $7 trillion in sovereign wealth.
And what do you think is in commercial, the Apples of the world, and just parked cash?
I actually don't know how it breaks down between generic
and the reason I ask is because by definition, if you can get a greater return than you can earn just on your cash, you should do it.
Right.
And it's not like it hasn't been easy to borrow money, right? So
right, you're saying, I know where you're going. You're saying there's a corresponding liability because Apple has cash, but they've borrowed to the tax arbitrage.
There's the tax arbitrage.
I think that's not a large percentage of the total global.
No.
Cash
What I was going more to that is, people are looking at what's the value of all that cash, right? What's the impact? And if it was truly impactful, right, it would have been invested.
Yeah.
Right. And because you could borrow, even if you couldn't move,
Yeah.
right? You could borrow against whatever money you have overseas. Here, Hewlett Packard, Apple, they all do, right? So in terms of the impact of all that cash, the question is, can it change anything? Will it change behavior if it's repatriated or rates go up? I don't think it will.
Yeah, I think I think you're exactly right. But the fact that it exists out there, and let's say at the Milken conference this year, I sat in a room with $5 trillion of cash. And I was an invited guest. Just said I was a wallflower, and just had to stay quiet. And they were talking about how they're going to invest their money. And they're not going to buy stocks.
Right.
They're not going to buy bonds at 1% or 2%.
Right.
They're going to keep buying infrastructure projects and ports, and they are going to invest in hard assets. That's how they're all thinking. The point I'm trying to make here is what in your life has gone down in price in the last 10, 20, 30 years?
Oh, nothing.
Right? I mean,
the value of cash.
Maybe data plans, right?
Yeah.
When you look at the CPI.
Well, yeah. Anything digitally, right?
Anything digital data, and truly technology has been innovational that we've had good deflation.
Right.
But I think now, when you look at the price of just about anything in life, it's going up. My view.
See, I would disagree. Right. I think artificial intelligence is going to change everything. Everything, 180 degrees.
Okay.
I've been in the tech business. I started selling PCs in 1982, right? I started selling local area networks. We were one of the first companies, my first startup in 1983.
Okay.
We started, I sold that, and then I started trading just tech. I started a hedge fund, started just trading tech stocks, sold that within 90 days. And then we started streaming, then first high. All these things have happened that have changed how we do business, changed how we lived our lives, changed everything, right? The internet. But what we're going to see with artificial intelligence dwarfs all of that.
And you think it'll be deflationary?
And yes, because there's going to be...
Because it displaces jobs?
A lot of jobs.
Okay.
That's
not good.
You can make arguments, right? It's not a question of how it plays out over 100 years. It's a question of how it plays out over 10 years, 20 years, right? And who knows what exactly, but I can tell you which, at the beginning, which jobs are going to be displaced. I can tell you the real estate's going to be displaced. I've talked to major companies that they're asking me, Mark, we're going to have all this extra real estate in all these towns. What are we going to do with it? Do you have any ideas? And I'm talking to them about
because they're going to be centralizing their operations.
Just fewer people.
Fewer people, yeah.
Yeah, just fewer people. So the concept of you calling in to make an appointment to have somebody pick up your car to get your oil changed, right? Someone will still drive to get your car, but there's going to be no people in transacting any of it.
That's terrible. I mean,
it is what it is.
It's great and terrible.
It just is
right?
what it is, right?
This is Dickens.
It is what it
cities.
is. Yeah, it is what it is, right?
But look back. So if you look back at China's ascension in the WTO, call it 2001, and you look at that 10 years later, which Lighthizer did in a congressional report, 4.5 million jobs were gone in the Rust Belt in the first 4 or 5 years. And when you look at a heat map today of the opioid crisis, it's the Rust Belt.
No question.
And truthfully, if you look at Trump, okay, we're not going to go into politics. I'm going
can't,
to make one statement that is just an observation of the election. The place where he won was the upper Mississippi River Delta that's always been blue, and it flipped red because they lost their jobs.
They lost
and they were hoping.
Or there was no
right?
hope, right? And that's the challenge right now. And I don't think people fully understand the impact.
But what happens when AI displaces more people?
Well,
so I've seen the first run of the movie.
Right.
Talk to me about the sequel, because it doesn't make me excited about
then the
America.
question, so when I sit down with these companies, we're not there just to commiserate how bad things are going to be.
Okay.
The question is, what do we do?
Okay.
Right. So I've spent way too much time teaching myself about machine learning, neural networks, deep learning, writing code, right? Teaching myself Python, just because I want to get a hands-on experience in this, right?
Right.
So when we have a conversation, I may not be able to build all of it, but I can understand
it.
Yeah, I can understand it. And so when you talk about, we went through this transition where we started off with spreadsheets, it was what if, right? So you have all these people here playing what if, and you postulate all these different variables, right? And you build models. And then you have different plugs, then you look at your models, you compare them to reality, right? But whatever fits on a spreadsheet, and if you get smarter people, they think of better variables, and then you have better probabilities based off of what they plug in when you play what if, right?
Yep.
That's the way you've been doing it since you started. That's the way I've been doing it since I started. What machine language does, it says, okay, we can take a lot more variables than you can ever think of.
Take all of them.
Right, we can take all of them and then say, if this happened, then there's this probability that this will happen. That's only the beginning, right? Then we start getting into something called generative artificial intelligence, where it starts to think, right? And for the most part now, not all the way through, you still have to label everything. Here's all my variables, right? But then when you give it to it and you say, based off of these variables that are labeled as such, here's an unlimited number of opportunities, right? And so based off of those, we're going to create biases and weights for them all and let you come up with some conclusion. Let it give you a variety of conclusions, and then you decide. Going forward, you won't have to label anything, right? But until then, if I wanted to do an analysis of who knows what, right? How to furnish buildings across the world the most cost effectively. And part of it was trying to label anything that can hold water, right? So it's easy to say that's a cup, but you're going to need somebody to say, okay, this is also a receptacle for water in some place that has nothing, right?
Yeah.
This can be a receptacle for water, right? Somebody standing with their mouth open. That requires image labeling and variable definition. Those are the types of jobs that are going to be available over the next 5-10 years that didn't exist before. Now, they're kind of like Amazon warehouse jobs. They're brutal, right? And it's not anything negative towards Amazon. It's just, it's going to be make good work.
Right.
And then we're also going to have our own Tennessee Valley Authority, right? Where they had make good public works. We're going to have make good jobs where we may use programs like AmeriCorps just to walk kids to school or just to read kids. We may have to tax robots, right? Whatever it may be, because...
Did you just say tax robots?
Yeah.
Okay.
Yeah, because there's going to be displacement. There's going to
Right.
be huge displacement. And as AI gets smarter, the delta is going to get greater until hopefully there'll be new jobs created that cross back over. But there's going to be this displacement period that, so when you say all assets are starting to go back up, right? I think, if you look at the Fortune 500, the S&P, whatever, and you look at total employment from those companies, it's not going up.
You're right.
It's
You're
going
right.
straight down.
And there's still wage stagnation, which has been perplexing central bankers, right?
And it shouldn't be perplexing.
We're back to kind of full employment of those that are actively searching for jobs, like
Right.
not the U6 number, the U3 number,
Right.
And but we haven't seen wage gains except for in a few skilled areas. We're seeing.
Well,
some
yeah,
wage
at the
gains.
high end, we can't pay enough to get, so, when
Right.
I talk about within the artificial intelligence realm,
Right.
there's a company in China paying $1 million bonuses
Yeah.
to get the best graduates. I mean,
Or best professors for that matter, right? They're
both,
pulling them out
yeah.
of schools.
Exactly right.
Yeah.
And so Vladimir Putin says the winner in AI controls the world.
Yeah.
China puts together a future plan saying, whoever dominates in AI, and they're subsidizing, Tencent, Alibaba, etc.
Yeah.
Right. And
That's right.
they
They know it's a race.
It is a race. We cut our Office of Technology and Science to one person who was an assistant to Peter Thiel. That's where we stand. So when we talk about infrastructure jobs, robots are built in Germany and they're getting bought by Chinese companies in some respects, and I think some Japanese companies bought as well. We don't build robots here very well, right? I just invested in my first robotics company, Robotics, that puts robots into companies. They're in Kansas City, I think it is now. But they lease and rent and sell robots into all these different types of circumstances to replace people. Right? But I had to learn. I'm not saying it's a good thing or bad thing. It's going to happen with or without me, but I wanted to learn what was going on. Those building up a robotics industry here, investing in our AI industry here, that's the new infrastructure.
Yeah.
Because if we don't do it and China or Russia win those wars, we're SOL.
Right.
We're out of luck, right? And so when we talk about the price of assets going up, if you're hiring, if you're talking about intellectual assets, if you're hiring, like we were just saying, the price is skyrocketing. People are, Montreal has become the center of the universe for computer vision. It's not US-based schools that are dominating any longer in those areas. We've got a lot of smart kids in MIT, all different schools, right? And kids are starting to realize it's a place for them to go. And I'm out there telling people the first trillionaire is going to come from somebody who comes up with something really unique in AI.
But when I think about, so as I sit here and I don't have the knowledge you have about AI, I try to read everything I can, but I don't know it nearly as well as you.
Yeah, if you go into my bedroom, there's a stack of machine learning for dummies, neural networks for no lie, right?
I have a couple of those books.
I'm not too proud to read those
I
books.
started with Pedro Dominguez's book, and I can't even get all the way through it. So.
No, The Master Algorithm is a great book to start with.
Yeah. But as I sit here as someone who follows macroeconomics, and the calculus in what you're telling me today is you're going to see a lot more AI. You're going to see generative and general AI, which is kind of the holy grail, I think, is what everyone's after. It's many years off. But if we're going to see that, and we're going to see, what you're telling me is there's going to be massively increased productivity because of AI, and therefore robotics and things are going to be inserted into the global Fortune 1000. That does mean fewer jobs. And when I think about that from a mathematical perspective, increased productivity, increased AI, fewer jobs, we still have population growth. Me as the macroeconomist is thinking, the answer there is not a good one. That means many more wards of the state.
Yeah, and that's the reality.
That's just reality.
Right.
Right? Larger opioid crisis, many more wards of the state.
Unless you recognize it's coming.
No, you're right.
Right.
It's a difficult plan.
It's difficult, right?
Yeah.
But it's a reality. And so, when I look at, like I just mentioned, right? So if you think of the Tennessee Valley Authority, that's where we are. Whether we like it or not, that's what's going to happen.
Okay.
But instead of creating make-good jobs to fix a pothole, because those are transient, and you can even make the argument that the increased traffic prior to that reduces.
I don't buy that argument, but I hear you.
There's always two different economists, right?
Yeah.
But the point being that if we're going to, when we had infrastructure projects that connected cities, right? That increased commerce significantly, and that led to our boom, right?
Yep.
The baby boomer generation, right?
We did just win a war, though.
And that helped too, right? But all those together, right? When you connected Dallas to Athens, Texas, that opened the door for Athens, Texas, right? If we just fix what's already connected, we're not going to see a boom. We're going to spend $1 trillion, regardless of who spends it, right? We're not going to get a boom. We'll get a pop, and it'll come right back down.
Right.
Because now you can drive your car faster. Maybe it's even an autonomous truck that goes back and forth. But it's still the same goods. The trucks are still the same size, et cetera, et cetera. If we invest in robotics and AI, that could be stair-step so that we could truly see a boom. The question is, how do you share that wealth, right? Now, historically, I'm a libertarian. The thought of sharing wealth was abhorrent to me, right? But everything's contextual, right? Because the cost of instability and the cost of social unrest is always a lot more expensive than the cost of social programs.
That's right.
And so if you're just looking at the variables and you're looking at it as a math equation, right? And you say riots, right?
Yeah.
Political instability because you have opioid crisis,
drug epidemics
expanding.
Yeah.
or make good jobs?
Yeah.
Which would you rather have?
How do you make good jobs if you're taking all the jobs away?
Well, you make good as in TVA, where you're creating jobs.
Okay.
Right?
Yeah.
Where if it's, it may be paying somebody, let's just say we define a working wage as $15 an hour, $30,000 a year, and I'm paying, a 62-year-old individual to walk a kid to school or to read to them when they get home.
You see it in Japan already. Right?
Yeah.
You see people shining escalators because they don't have much to do.
Yeah.
Right?
I mean, and there's no crime there. It's just like
Right.
life is a lot. Well, I wouldn't say easier, but they
They
have
a
other
declining
challenges.
population.
Yeah,
I wonder if we have to go into a population decline to make it work.
Well,
And
there's
that's a much
evidence
bigger-
that says that we're starting to decline, and if we don't have additional immigration, we're going to have bigger problems as well.
Yeah.
Right? And so we're going to need people. Look, we're going to get to, in my opinion, we're going to get to a point where decisions are made individually on arbitrage of time. Right? We'll value our time. You'll value your time. That's the whole Uber economy, right? Where people say, what's it worth? We do that now.
We do.
What's it worth for me versus I can hire somebody, right? And that somebody can be for 10 minutes. That somebody can be for 10 hours. It could be for 2 seconds. Like a couple of my companies, we have scripts now for Mechanical Turk on Amazon where it might cost us a penny to label things.
Really?
Oh, it's crazy, right? I invested in the company because the guy was a computer vision genius. All he does is hand puppets. So you do like this, hand puppets like you do with your kids when you were little, right?
Right.
Only it digitizes it using AI because he has to write computer vision and AI scripts that say, okay, this is a knuckle, here's a second knuckle, here's the thumb, right? And I'm going to recognize
Shows
things.
it spatially. Yeah.
Right, and all that stuff is advanced computer vision. But it all goes back to, hiring people based off the value of their time. When I make decisions, build versus buy, robotics are now part of the decision. It's, what's the most cost-effective way? What's going to give me the best return? What's going to be the path of least resistance for me effectively?
Yeah.
And now it's not just, okay, who can I hire? It's,
all right.
What can I hire? What can I put in place?
Let's move into digital currencies and ICOs. You've been an innovator in the space. I've been a spectator.
I don't know if I've been an innovator, but I've been more spectator. But
I've been
involved,
a spectator.
let's put it that way.
I'd love to get your view, and those are two separate and distinct categories. So I'd love to get your view on both of those categories separately. And
so there are actually three, right? So there's blockchain,
right? Okay, sorry.
The technology, right?
Right.
And I'm a big fan of blockchain.
I am too. I take that as a given. So
Right.
I left
we'll put that
blockchain out. That's a given.
That's fine. Right. So then there's
the
tokens.
decentralized network
Right.
is perfect.
Yeah.
It literally
Now
is.
there's challenges, right? But that leads into the fact, can
Yes.
Bitcoin or Ethereum or any of them be currencies?
Right.
Right. And they can't be because you can't transact right now. Right? If they were truly currencies, you wouldn't try to convert them or value them based off of other currencies.
Yeah.
Right? They would just be intrinsic. And you can only transact, I think there's 372,000 transactions. I forget the exact number, but there's
Per minute, yeah.
Yeah, and
Or per second, right?
whatever it is, yeah.
Whatever it is, yeah.
And now they're having to do these segwits where they're branching off, right, to try to increase more, and they're arguing about how to do it.
Yep.
So there's their own central bank issues, right?
That's right.
Right. So it's going to be very difficult for it to be a currency when the time and the expense of doing a transaction is 100 times what you can do over Visa or MasterCard.
Right.
Right. So that's another issue. So then what is Bitcoin, Ethereum? What's their intrinsic value? It's a collectible.
It's just a digital asset that's a collectible.
It's a collectible.
Yeah.
Right. And in this particular case, it's a brilliant collectible that's probably more like art than baseball cards, stamps, or coins, right? Because there's a finite amount that are going to be made.
Yeah.
Right. There's 21.9 million Bitcoins that are going to be made. And if enough people hold and don't sell, and enough people borrow to buy, just like we saw in the stock market. Because look, as much as a share of stock is ownership in a company, that's the all-time lie, right? You have no authority, no ownership.
Unless you control it.
Yeah, unless you're the controlling shareholder, right? Or you're willing to spend a lot to make a lot of noise.
The place where it's not a lie is in the U.S. The capital structure means something.
Mm-hmm.
I know the bankruptcy courts here sometimes are the Wild West, but if you were to liquidate a company, in theory, you would liquidate the senior lenders first, then the junior lenders, then the equity.
But
you actually do have a claim.
By definition.
Yeah.
Yes, by definition.
But you have no control.
But in practice,
Yeah.
right, the number of public companies, since that's what's relevant, right?
Yeah.
Number of public companies that are going bankrupt is relatively small. the number of people who are buying shares of stock, even though it's a decline. Look, you can make the argument that part of the reason the stock market has continued to go up so dramatically is not just because of easy money, but because the number of public companies has declined.
That's right.
When we went public in 1998, there were 8,000 approaching 9,000 public companies. Now there's 3,500.
And 360 of the S&P 500 are engaged in corporate buybacks.
Yes. Yeah, so the number of shares outstanding
It just keeps going down.
keeps on. Look at IBM, right? They make a living of financial engineering, that, right? And so, so there's scarcity. So it's point being, scarcity sells, right? And there's no greater defined scarcity than Bitcoin and Ethereum.
Do you own any of the okay?
Yeah. So
do you own, which ones do you own?
I own an ETN in Sweden for Bitcoin.
Sure.
So there's a Swedish ETN because I wanted the liquidity.
Yes.
And it's a hassle to try to just buy it, and you've got to make an investment in time and effort to do it.
I tried it, and
it's a pain in the ass.
And I failed, truthfully.
Yeah.
To buy a small amount.
Yeah.
By the time I got my account open, it had moved so much that I said, I'm just not going to do it.
Yeah, I mean,
even for fun, I'm not going to do it.
I owned like one Bitcoin from like 10 years ago, or whatever it was, right?
Yeah.
Which is great now, but yeah, I just once I find out about this ETN, as opposed to an ETF, obviously, right?
Yep.
Right. It's liquid, it's fast, it marks to market correctly.
Yes.
Right, and so it's growing, so I liked it.
Does it trade at a premium to Bitcoin's value? It trades right on top of it.
Yeah, within pennies.
And then how do you think about, so that's the digital currency. You don't own any of the other digital currencies. Okay, they're just interesting to you. Okay, and then when you move into ICOs, how do you think about ICOs?
So
you mentioned to me it's a seat license.
Yeah, that's exactly right. It's ICOs tokens really are an opportunity. There's two different ways to look at ICOs, right? One as a quote unquote investment vehicle, which I don't, right? Again, that's just a scarcity play.
Yeah.
It's like an IPO in some respects. It's just if the float's small and you can convince enough people on the roadshow to buy, it's going up, right? And whether or not there's any liquidity, and there's all kinds of uncertainty on the exchanges and what they can and can't trade and what's legit and what's not. So I've avoided the speculative side of it. I've been involved in two of them. One is Unicoin, which does E-Trade. It's a company, Unicorn, UNIKRN, that does legal sports betting for esports and other sports outside the United States.
Okay.
They literally moved to Australia to get legal. And I've been an investor in them for years. And they did an ICO that I participated in, but I signed an agreement saying I wouldn't sell any, all that kind of stuff. So it wasn't a trade for me.
Yep.
And then I have another one, Mercury Protocol, that we're actually using it to create a messaging it's a messaging protocol that allows for authentication, distributed authentication, and the ability to participate in a social network in a way that allows you to earn more credits, right? So
by participation.
By participation, right?
Okay.
So you can be rewarded by your fellow social networking members because this person, Kyle's great.
Active participant.
Right, you're an active participant. So I'm going to reward, and that in turn gives you a level of authentication and quality that a troll isn't going to get like they would on Twitter. So the whole idea is to eliminate trolls, to have a better quality handle, but that's a token, right? And so it's a protocol that goes out, and any new social networking software can use it. Any existing one can integrate it. So if Twitter wanted to integrate, or if somebody else wanted to integrate, they could.
Yeah.
And so as a protocol, we're trying to take advantage of the networking effect. And that's just getting ready to come out. But again, I'll invest there, or investment's not the right word. I'm buying tokens, right? I'm buying tokens there that I'll use as part of the protocol.
Yeah, and so the comments that I made that began our conversation on this were, I read one offering document about a coin that was going to reserve. It was going to pay for research for whether or not a synthetic rhino horn was an aphrodisiac. It's when I'm a student of history, and I've read, I've looked at bubbles and things throughout my life and my studies.
ZZ Best,
And there's a tulip ICO. I don't know if you're familiar with this one.
I haven't seen that one.
So the tulip ICO is essentially a way for the people to snub Bitcoin skeptics. It's a way you can send a tulip token to someone that snubbed Bitcoin to say, it's working.
Look, it's worth it. Yeah.
It's just some of these things are so silly.
But that happens with everything, right?
It does, but Mark, again, I worry about it from a regulatory perspective, and I'm not a regulator, but the ICOs have raised $3 billion
Really?
this year.
That's
it was
crazy.
$2 billion going into September. So as we sit here today, we're in mid-October roughly,
it's only escalated.
$900 million was raised in September, and when I think about it, I love the innovative entrepreneurial spirit. I love the fact that many of these things are actually going to do really well.
Hopefully, yeah.
But there's so many of them that are just completely stupid and
Isn't it
frauds.
1995 all over again?
It is.
Yeah.
It is. But it's interesting when I look at the SEC and the CFTC. There's no knowing. So I know some people in various places that tell me that at the SEC, each office wants to keep their functional relevance, and they want to regulate it themselves. And I think there's 6 or 7 regional offices, or maybe more. And then the CFTC, of course, regulates commodities. SEC regulates securities. They're trying to determine whether it's a security or a commodity and who's going to regulate it.
And the smart ones realize it's not a security. They make it so it's not a security, right? It's the dumb ones that are going to get shut down.
Right. But I guess my point is that they need to get on this.
Oh no,
they
no
need
question.
to be regulating it right now.
Yeah, and they put some things out.
It'll be good for America. It'll be good for people.
I agree 100%. Yeah, I agree 100%.
So that the crooks don't.
Problem is, it's the SEC.
Yeah. Well, I don't want to point any fingers being in the business that I'm in. But,
right. Yeah.
But someone's got to get on this,
Agreed.
and they need to centralize it. And someone at the top needs to say, "You are the czar. You're going to control this. It's not going to be 6 different people in 6 different offices."
Unfortunately, there's nobody at the top that has any understanding of it.
We're not going in politics. We're not going there.
It's just obvious.
But it is obvious. So I'd love to kind of conclude by getting to the point where I'd love to know, in your mind, in the last, call it 6 to 12 months, what are the most interesting investments you've made that you can talk about?
Sure.
And then where do you think, I get it, do you think AI is the place to be in the next decade? But where do you think, if you're allocating capital today, if you're an investor, where would you be investing, let's say free cash, if you weren't in the position you're in now where you're just investing in interesting things?
Right.
If you were thinking
if I had to get a return,
pure economics, where would you be looking to invest?
Depends on what my expertise would be.
Okay.
Right. I mean, I always tell people to focus on what you know, and if you don't know, just put it in an SPX cheap fund, right?
Yep.
Right. And maybe now I might say, okay, put 5% in Bitcoin or Ethereum, just red or black.
Yep.
Right. Because it's like artwork, but it has
a
upside.
finite amount of artwork.
There's a finite amount of artwork, right, or baseball cards, right? But yeah, I mean, if I would just tell people an SPX fund, because I think the job of America is still business, and I think whatever benefits will come from AI or whatever is going to
filter into
and
equities.
I think the FANG stocks are going to crush it. My biggest public holding is Amazon.
Okay.
I think, and we can talk a little bit about valuations there, because people go up and down about the valuation. The way I look at those companies they're the world's greatest startups with liquidity.
Yeah.
Right. If you look at them as just a public company where you want to see what the PE ratio is and what the discounted cash value, you're never going to get it, right? You're never going to see it. If you say Jeff Bezos, Reed Hastings, those are my 2 biggest holdings, but even to a lesser extent, Tim Cook, I'm not as sold on Apple necessarily, but they're trying to get there. But Google as well and Facebook as well, they're just nonstop startups. They're in a war, and you can just see the market value accumulating to them because of that. So if you look at, and I don't know the exact numbers you made, the amount of VC invested in tech in any given year, and I have my option of putting in the next Uber, right, or the next Lyft or whatever, versus Amazon, where I get someone I think is smarter and better.
And already has a scale.
And already has scale and already has liquidity.
Yeah.
Amazon's the world's greatest startup. Netflix is the world's greatest
Which makes it harder to innovate. If you were
I think you can still kick their
Cuban,
ass. Starting all over again, I still think you can still kick their ass, right?
You do.
Yes.
Okay.
Because I think on the margin, you can't, even at that scale, even with all the AI that they both use, there's still on the margin places to make money where they're inefficient. Because it's still vertical, and it still takes time to get to the edges. And so I think there's a lot of opportunities for small companies to come in. And you're seeing a lot of that now. Like you see growth hacks on Kickstarter, where I have one of my companies, a Shark Tank company, that all they do, their whole entire business now is just releasing products on Kickstarter, delivering them, and then going on to the next product.
Okay.
And it's just a pure growth hack. There's other companies that they measure what's selling the best on Amazon. and then they go out and buy those products, brand them, and sell just on Amazon and buy Amazon. It's just its own little ecosystem where kids are. I try to give this kid some money, right? Literally, because he was so good at it. Didn't need it. He was already making $1 million a year, working an hour a day just by tracking Amazon.
Really?
Yeah, and there's just so you can be smart because they're so big. But you see Amazon. It's fascinating to watch Amazon. So now, like, they're doing chips. They're OEMing their own version of chips, their own teas, their own. So wherever they see categories where they can manufacture and sell, they're competing with their own sources of product right now.
Sure.
And that's going to be very scary.
Yeah. They just released a sportswear line that they're OEMing that had a material impact on Nike, Under Armour.
Oh
and
yeah,
the
without
rest
question, and more so.
Lululemon.
Right?
Yeah.
I mean, I do this all the time when I'm giving talks. I'm like, how many people shop on Amazon? Everybody raises their hand except one. How many people know anybody that works at Amazon? How many people have ever even talked to somebody that they think?
Right.
So you talk about the value of assets over time, right? But the leverageable opportunities there. And I talked to somebody at Google. Now this was over a year ago. They're like, Mark, we used AI in our ad serving and increased our revenues by $9 billion.
Yeah.
It's crazy all the things that are changing and the leverage points. And now, all that said, if I had expertise in AI and medical, any area within medicine, right? I invested in this 22-year-old kid who has his master's degree and he's a doctor, a medical doctor. And he found these sensors that are able to track the electrical pulses that every organ in our body emits. So our heart emits an electrical pulse, and with these sensors, he's able to capture that. And he captures them now into an old-fashioned wave file. But now he runs them through deep learning network,
right? And
with 98 point whatever % and growing accuracy, they can determine if you have one of 5 ailments, heart ailments, and they're going to go next organ, and keep on expanding. It's just
that's going to make healthcare really interesting. Yeah,
change the dynamics of it. Now it becomes a question and a business opportunity for me to say, okay, how do you change healthcare?
Yeah.
Right. And so I'm having something I put together scored by 2 different economists, one a progressive economist, one a conservative economist, and just saying, okay, what if we took insurance companies out of healthcare altogether? What if we self-insured as a country, right? Now all of a sudden, when you have a direct connection with everybody,
we might have to go to the single payer system, right?
Not even single payer,
given
right?
Obamacare.
Yeah, because not even single payer, because with single payer, there's going to be time after time where you have to increase the debt ceiling, and that becomes a life or death decision. And so, because of it's all taxpayer driven, right? So I think if what we're calling a working title a single guarantor, which means, if you want to go to college, we'll guarantee a loan for you, right? If you want to buy a house, we'll guarantee a loan for you. If you want to get healthy, you have to go borrow it from a payday loan company if you can't afford it, or put it on your credit card. Right. There's no reason why we couldn't guarantee it as a country, and just a means test of repayment. And if you mean test repayment and make people responsible for their own health care, even if it's not 100%, right?
Right.
But just some responsibility, they'll make better decisions.
Yeah.
And because you have a direct connection to them, you can incent them to go to a gym, to go get checked, to go visit a doctor, to take their medication, things we can't do now, because the whole job of an insurance company is to obfuscate and complicate everything, and to grow the total pie, because if their revenues don't keep on growing, their profits don't grow.
Right.
So I think there's a lot of opportunities there, whether big or large, to change the game. I think AI's got to be a core component of that. And I don't think we've stagnated at all in terms of being creative and innovative and going in new directions.
Yeah, that's amazing. Well, Mark, thanks very much.
It's fun. I really enjoyed it.
Yeah, it was great, and
yeah.
I hope Raul and the team loves it. And,
I hope so too. And now you just send me a copy.
For me, it was awesome. So
yeah, I enjoyed it too, Kyle.
I'll send it to you. Thanks.
We have to keep on having our breakfast.
Yeah, we shall.
Yeah.
Thanks a lot.
Kyle.
So I think that didn't disappoint. Really great interview. I think Kyle asked some fantastic questions. I was really interested to see how Mark was thinking about how he's going to pass on money to his kids. I mean, that's not a problem most of us have, but I thought it was fascinating. And I also just like his simple investments thesis about owning basically one stock, Amazon, and holding it, because Amazon stands for a lot of the great opportunities in the world. I just thought it was really clever. I just like interviews like that. This is what you get on Real Vision. You get the masters of the markets, uncovering the best opportunities for you, finding out the risks in the markets, and where you can find the best themes. You can look at all sorts of interviews on Real Vision. We have the masterclass of Kyle Bass, so you can really understand his thinking, or Joe Duran's Rags to Riches story. There's something for everybody, and it's always a learning experience. And that's the idea of Real Vision. You can learn from the very best, learn from their mistakes, and see the opportunities that they see and have some of the success that they have. Take a free trial of Real Vision, www.realvision.com, and have a 7-day pass.